Well, it's day 2 after the union budget, and to be honest, the market is still trying to digest all that came out of the budget, especially the higher taxation that you'd have to pay on your listed shares, as well as, on things like property. But our research team is standing by to give you the list of top 10 stocks as we begin a brand new day of trade. You have so many companies that came out with their earnings, so let's get straight to that. HUL first up. Mangalam is here to tell us more. Mangalam, good morning.
Good morning. So FMCG was the sector of yesterday, could well be the sector of today as well, and that's because of HUL numbers, because in these numbers there are green shoots which are visible, probing one to ask whether the elephant is ready to dance now. What's good this time around is that the revenues have been a mild beat over street expectations, and it's the first mild beat that we've seen from HUL in the last many quarters. The EBITDA also, has seen a bit of a beat, and the home care business grew by about 5% as against street expectations of 2 to 3%. What did not do too well, beauty and wellness grew by about 3% versus 5 to 6% expectations. Food and refreshments were buoyed lower by Horlicks and Boost that were subdued performers. But volume growth of 4%, no one's complaining. Gross margins improved by 150 basis points, and personal care business as well did not fall beyond what was expected already. Management sees gradual recovery in rural demand, near zero price growth going forward, telling you that it will be only volume-led growth going forward, with EBITDA margins maintained at current levels. Their priority is to accelerate volume growth, strengthen competitiveness, and maintain healthy margins. So some aggression shown by Hindustan Unilever. See green on the stock.
Okay, all right. Thanks a lot for that, Mangalam. Well, let's hop across to Abhishek, who's here to tell us about Bajaj Finance's numbers. Morning, Abhishek.
Calculation shows that the net interest margin has declined both YOY and quarter-on-quarter. So my calculation shows that there is a 50 basis point decline in net interest margin of Bajaj Finance on a YOY basis and about 25 basis point on a sequential basis. So this net interest margin could be one of the lowest that you are seeing last 2-3 years or even more. So NII growth is at 24.5% YOY and about 4.4% sequentially. The other income boosted the top line growth. So net income was up 7.2% on a sequential basis. Provisions spiked up. They increased by more than 69% YOY and about 28.5% sequentially. That impacted the profitability, and profits grew by only 2.3% quarter-on-quarter. Take a look at the asset quality. The deterioration over there is very high when compared to Q1 versus Q4. This is the highest deterioration in Q1 that I am seeing for Bajaj Finance over the last 2 to 3 years. So gross NPA has increased by 8.5% in absolute value. Net NPA has increased by around 11% on a sequential basis, which suggests that the PCR calculation shows that the PCR has declined by 100 basis points. With reference to our poll, both the NI and PAT is lower than our poll. NI by 3.9% and PAT by 1.6%. Back to you.
All right, Abhishek, thank you very much for that. More numbers, right? ICICI Pru Life also reported earnings. Yash is here with details. Yash, morning.
Morning, Prashant. So, of course, for ICICI Prudential Life Insurance, the first quarter was a mixed bag, but with a very important positive bias which came in the numbers. I'll first just make you understand the numbers with respect to our poll. New business premium has come in line with CNBC-TV18 poll. Total AP and VNB have missed estimates. Retail AP has come with a strong beat, and margin, that is the positive bias which I'm talking about, that has come in line with the estimates, and the street will be watching out for the margin number. Just to refresh the numbers in terms of year-on-year comparison, new business premium has seen a growth of 24%, total AP annualized premium equivalent growing at 34%. Retail AP, which came with a beat to our poll, is growing at 57% on a year-on-year basis. VNB growing at 8%, and the margins that I was talking about, the company has been able to derive margins of 24% as compared to 30% on a year-on-year basis. But margin is the number where the industry is seen, deterioration in the margin profile because of higher ULIP sales. ICICI Prudential Life has come up with inline margins, and that's the number which the street will be looking out for. The stock has rallied about 13% in the last 1 year, 12% in the last 3 months, trading at 1.9 times price to embedded value. So because of the margin number, there's still some runway, it seems like.
Okay, well, after the announcements that came from the budget yesterday, I'm sure some spirits were needed to get people going. Mangalam is here to tell us why you should be watching United Spirits this morning. Mangalam, over to you.
Well, it was a good operational performance that came in. It was a tough quarter for, the spirits industry, the outdoor consumption industry itself. But, in that, the company posted very good performance, especially on the EBITDA front, which came in at around 458 crores versus street expectations of 405 crores as well. This even as the revenues at 2350 crores were largely in line. That took the margins closer to that 20% mark, much ahead of the management's guidance as well. And the net profit came in at around 300 crores versus expectations of 238 crores as well. What is it that led the revenue growth? It was the premium spirits, prestige and above. Revenues grew in double digits versus expectation of 8 to 9%, and that was led by volume growth of 5.1%. Again, the street was working with a number of 4 to 5% as well. So premium products doing better and popular products not doing so well has actually aided their margin. So we have value for the popular products declining by about 2.4% and volumes declining by about 4.6% as well. And additionally, they've gone ahead and made a couple of acquisitions as well. They've announced, around 2.3 crore acquisition, 2.3 crore investment in a non-alcoholic company called Sober, and also a company called Caffeine. They bought 25% stake. Caffeine makes specialty cold brew coffee liqueur. So interesting foray out there as well. See green on United Spirits.
Okay, Mangalam, thanks for that. Well, let's move to the pharma space. Then Ekta is here to tell us about Torrent as well as Dr. Reddy is. Ekta, morning.
Morning. Well, Torrent will be reacting to its numbers today. It came out post-markets. Revenue was it was an inline set of numbers. So revenue was up around 10-odd%. Margins 31.6%. Street was anticipating 31.4%. And profit at 457 crores versus our pool of 458 odd crores. Now, adjusted for one-off expenses, the margins came in at around 32.3% as per the company. Now, India did well. It was up 15%. Their chronic business, in fact, outperformed the market with a growth of 14%. Germany did well. It was up around 10-odd%. US continues to be sluggish. It was 31 million versus 32 million Q-on-Q and versus estimates of 35 million. But they have indicated that there could be a pickup in the coming quarters in the US business, aided by 6 to 7 launches. So I expect Torrent Pharma to be in the green today on the back of their numbers. Dr. Reddy's will be in focus because on the 27th of July is when they will be meeting for their Q1 numbers. They will also be considering a stock split.
Okay, all right. Thanks a lot for that, Ekta. Well, I'm keeping an eye out on Vedanta. Yesterday, the stock actually was lower, but that was more to do with the global weakness that we saw in base metal prices. For the time being, the stock's in focus because the board will be meeting on July 26th for the second interim budget. The record date as well has been fixed as August 3rd. Now, a couple of alerts out there. They've already paid one dividend of close to around 11 rupees. That was in May 2024. And they're sitting on a good amount of liquidity because they've got 8,500 crores via the QIP road. So keep an eye out on the stock. Fundamentally as well, the stock is well placed, but prices, LME prices, need to be tracked. Well, let's go back to Abhishek. He's here to tell us about Mahindra & Mahindra Financial. The numbers came during market hours, but there were con call takeaways as well. Abhishek.
M&M Finance did report their P&L during market hours. However, the finer details came out in the presentation post-market, wherein the net interest margin looks to be the lowest in many quarters. It has come in at 6.6% versus 6.8% YOY and compared to 7.1% for the previous fiscal that they had, FY24. Now, I'm saying previous fiscal because they give cumulative net interest margin, that is Q1, H1, 9 months, and then fiscal. So there is a sharp decline in their net interest margin, and P&L is below pole. The NI is at 1,894 crore versus 1,910 crore of our pole, and the PAT has come in at 513 crore. We were working with a number of 520 crore. Another finer detail was with respect to the absolute value of gross NPA. Gross NPA in Q1 increased by 8.6% quarter-on-quarter, and net NPA increased by 18.5% quarter-on-quarter. So there is a sharp deterioration, unlike what you have seen in other few years. This is the highest gross NPA and net NPA deterioration that we have seen in Q1 of a fiscal. So PCR has declined. Provision coverage ratio, as per my calculation, is below 60% versus 63% in the previous quarter. Management has reiterated that they will maintain their credit cost at around 1.4%, and on the higher side, they will try and maintain the ROA of 2.2%. So if at all, I spoke to some analysts, they said if at all asset quality deteriorates, PCR of the entity could fall further. Back to you.
All right, Abhishek, thanks very much for that. So that's M&M Financial, which will also be reacting to earnings. Parag Milk is the other one we want to focus on. Mangalam is here with details on this one. Mangalam.
Well,
Back
after
to you.
United Spirits results, everyone would say, Daru, what about Doodh? Doodh's doing actually a lot better because, the margin expansion for the dairy sector continues. If you look at Hatson Agro, Dodla Dairy, Parag, all of them seeing gross margin expansion anywhere between 400 to 550 basis points. And that's reflected in Parag's numbers as well. The EBITDA is up 32% at a time and the revenues are up just about 1.1%. Margins improving from 5.6% to 7.4% and net profit up by 28% as well. They reported a 10% overall volume growth, and in that as well, premiumization has been working. Ghee, cheese, and all their new age businesses, which is protein and value-added milk, etc., growing between the tune of 15, 12, and 51% as well. All these things working for them, along with reducing milk procurement prices as well. So, same time last year, milk was procured by them at around 38 rupees per litre, now down to 31 rupees, which is a decline both quarter on quarter and year on year. This is a positive, especially because last quarter there was a mild blip in milk procurement prices, making people wonder if the dairy cycle is turning, but turns out that not yet, it is still positive.
Okay, Mangalam, thanks for that. Well, let's go to Vamakshi and wind this down with Schaeffler India. Vamakshi, morning.
Well, good morning, Nigel. A good set of numbers is what the company has reported this time around. Revenue saw an uptick of almost 15% on a YOY basis, and this has come in higher than what analysts were expecting. And this growth in revenue is largely being led by bearings and industrial solutions as well as vehicle lifetime solutions, both of which were up nearly 18%. But the cost of goods sold were much higher as compared to the revenues, growing by almost 17%, and resultantly we saw a contraction of nearly 90 basis points in the gross profit margins, and gross profit was up nearly 13%. EBITDA came in higher than what the street was expecting, growing by almost 10% YOY, and the margins, however, saw a contraction of nearly 84 basis points. Net profit, however, came in line with what the street was expecting, nearly 3% higher. Overall, it looks like a good set of numbers with revenue EBITDA above estimates, EBITDA margin slightly below, but the net profit is in line with what the street was expecting, and resultantly I expect the stock to open higher today.
Okay, thanks a lot for that. So those are some stocks to watch out for. But let's also find out what's happening in the world of commodities, because clearly there's a lot happening over there. Oil prices have been rising as US crude and fuel inventories are seen shrinking. So Manisha Gupta is here to give us the latest on that. Manisha, over to you.
Thank you for that, Sonia. Well, yes, some bit of an increase in crude oil prices, but it's not so much. It still is trading around that 1 month lows. And if you look at the crude products, heating oil is at a 7-week lows, gasoline at a 1 month lows. The markets are reacting to the US decline in inventories. But apart from that, the street does believe that with the Israel and Hamas ceasefire talks gaining momentum, that pressure could continue into the market. If you look at the last 1 week itself, the crude oil prices are down by 3.5%. It has been a huge pressure that we've seen in the metal prices as well. The gold and silver prices, while in the international markets, fell by 0.5%, but the Indian market saw a reaction to the duty being slashed. So we've seen 5% of a decline overnight in the Indian gold and silver prices. The base metal prices also have been taking it quite strongly. 3-month lows on copper. We've seen another 2% of decline onto this one. Iron ore prices are trading at a 1-month lows. Aluminum at a 2-month lows. So the strength in US dollar and, of course, the rising inventories, weak economic data from China, all of that has continued to weigh in for the metal prices. So after a weak June, the July seems to be going on the same set.
Okay, all right, Manisha, thank you very much for that. So that's what's happening as far as commodities are concerned. We'll take a quick commercial break here. On the other side, we'll have one of the biggest money managers in the country, S. Naren, Chief Executive Director and Chief Investment Officer at ICICI Prudential Asset Management Company, will be joining in to discuss what to make of the budget announcements and markets from here. Stay tuned.